Welcome back to the second half of NEWSBREAK Live. As we get into tax season, we invited certified financial planner David.RAE from Trilogy Financial to join us and share some simple tips and information on how to be more financially sound this new year. Thanks so much for joining us, David. How are you?
Wonderful. And yourself?
Great. So tell me about your company and the services you offer here in Torrance and across Los Angeles County.
Well, at Trilogy Financial, we help people make smarter financial decisions through financial planning. So anything that's financial, we're there to help be your decision coach. We'll help you with your tax planning, your financial planning, your investments, and even estate planning. So just, if you have a financial question, reach out and we can help guide you to the right answer.
And it is tax season. I just mentioned that.
It is.
So tax deductions can keep more money in your bank account. So tell me about that.
It's not how much you make, it's how much you keep. So with some proactive tax planning, you can keep more of your income, and it's almost like getting a raise without having to work harder. So you want to be smart and proactive and look for ways to keep a little more of the money you're making. There's a lot of deductions that people miss, and it just ends up paying more taxes.
What is a tax deduction for people who may have never even heard of this?
Well, a lot of people probably just go check the box, which is a standard tax deduction. So if you don't have any tax deductions to think of, or if you haven't done the legwork to do it, there's a thing called the standard deduction, which is the same as any other deduction, but you just get a flat amount. In that case, you say the standard deduction is, let's say $6,500. It lowers your income, $6,500, that would be taxable. So whatever your tax rate ends up being, you lower your income and you pay less taxes based on the deductions that you have. So the more you make, the bigger value you get from a tax deduction.
Okay.
Does that make sense?
That does, but I want to know, because I know you shared with me some information, some examples of deductions that people may not know they can actually claim.
The tax system here in America is complicated. There's millions and millions of different ways to take tax deductions and legally lower your tax bill. So a few things that people miss quite often is, you might know that you get a deduction for donating to charity. That's pretty easy. You go, I gave $100 to a charity, you deduct it. Pretty easy to track. But if you spent money raising money for charity, so if you had a bake sale at school, those eggs all of a sudden are tax deductible. You wouldn't normally deduct eggs, but if you're making a cake to sell at a bake sale, you could do that. I know for me, I do the AIDS life cycle from San Francisco to LA every year. I've done it 7 times. A lot of other people I know and a lot of my clients do other charity bike rides or swims or runs. Expenses with that, if you're buying gear for that or you're traveling to that, you can deduct a lot of those expenses. A few other things here. We're in an expensive real estate market, so if you've refinanced your house, some of those points that you've paid, points are expenses to refinance that people may have taken. People forget about that one. You can deduct the mortgage interest. People know that one, but the points and PMI, which is principal mortgage insurance, again, we're in a very expensive real estate market here. The median house in Torrance is something like $760,000, which seems crazy to the rest of America, but here it's just probably a nice, okay house. So if you do pay PMI, you can actually deduct that as well. So people miss that one quite a bit. And there's a million others. So sit down with your financial planner and your tax pro and be proactive. Look for deductions, look for things that you're already spending money on. The best tax deductions are things that you're already spending money on and just making sure that you're tracking them. And if you're a business owner or self-employed, there's a whole nother bevy of deductions that you can take, and it's even more important to be proactive.
Wow, it's such a great tip. And how can people file it? I know you mentioned a little bit about that.
There's a few ways to file your taxes. You can sit down with a tax preparer, like just a CPA or an enrolled agent. Make sure they are licensed as either an enrolled agent or a CPA. You can also go to a million different softwares. There's things like TurboTax and do it yourself. I think if you're very simple and you're just taking the standard deduction, you work as an employee and have a W-2 and not a lot of real estate or investments, you probably can end up doing it yourself. But if you are making a high income, if you're a top earner, or if you do have real estate or investments, you do want to be proactive and make sure you're minimizing your taxes and maximizing the money you keep. So do talk to a financial planner and an actual tax professional to make sure you keep more of the money you're making.
And speaking of money, who doesn't love money, right?
I love money. I hope you do too.
Yes, I do. We're going to move into the topic of debt. So many people in the U.S. have debt. I know the recent statistics, show that 11% of U.S. households in the past decade have nearly $132,529 in debt. I can't even say it. It's so much money. So what can people do to pay off debt? And obviously, it depends whether you're a 20-year-old or a 40-year-old. Can you tell me a little about that?
Yeah, it also depends on the type of debt you have. So I guess if we took the household debt here in Torrance, and it's going to be much higher if you can account for mortgages, just because we have high real estate.
Right.
So, again, if the house is $760,000, that's probably, a very large mortgage. So you're going to be above that amount. You want to make sure you're paying off and not paying for credit card debt, consumer debt, car notes. Student loans, I'm a little bit, I don't love them either, but they're a little better off because at least you went to school, which should hopefully increase your income in the future. But picture that, if you had $130,000 in credit card debt, if that was credit card debt, you're probably spending $30,000 to $40,000 a year on interest alone, let alone trying to pay it down. What else could you do that's a lot more fun than paying for your credit card interest with $30,000 or $40,000? That's a good amount saved for retirement. That's some very nice trips. That could be a new car. Get your debt under control. It's just not a good thing to be doing.
And speaking of debt, delinquencies on auto loans, this might actually be surprising for many people, has rose about 14% over the last year. That's something you don't really think about. You think of college loans.
Yeah. Cars are very easy to get loans. It's probably one of the easiest loans to get. You walk in and go, okay, I can breathe. They're going to give you a $70,000 car note because they've got that car there. It's a depreciating asset. Don't try and keep up with the Joneses. I know we spend a lot of time in traffic here in the greater LA area and you're probably commuting to work. And it's tempting because it's so easy. You walk in, they go, you qualified for a $70,000 loan on a car. Can you afford that $1,200 a month payment? Even if you can't afford it, do you want to afford that car payment? It's all about making smart financial choices. I could afford that car payment. I could drive a Range Rover, but I choose not to. I have a nice car that's paid off, and I can travel and have a lot more enjoyment. I can do things that I own a nice house. I'd much rather make those choices of things that appreciate and grow in value rather than become a liability and an expense.
And that all kind of goes towards you can save more then for your future.
Making smart financial decisions makes it easier to make other smart financial decisions. If you don't go pay too much for that car, all of a sudden you're saving for retirement. You're getting that tax break, another tax deduction is saving for retirement. If you put money in that 401k, if you put money into a traditional IRA, you get a tax deduction which lowers your tax bill. And more importantly, you're saving for retirement, but it does give you a nice reward in the short term. And again, smart decisions lead to other smart decisions. That way, if you don't have that credit card debt and you put that trip on a credit card, you probably will have the money to pay it off. If you have a trip account, I'm a big travel fan, so I like to save ahead so that I know, oh my gosh, this great once-in-a-lifetime opportunity came up. I'm going to jump in and take that trip with my friends versus, oh my gosh, my credit cards are maxed. Can I afford it?
Yeah, I feel like many people probably
They probably
have.
do. If I had $132,000 or $131,000 in credit card debt, I'd want to probably kill myself, but no offense.
How can people save money? I mean, what are some simple steps? Whether you're 27 years old like me, or you're hitting 60 and you're still working and you want to retire soon, what can people do?
The absolute number one piece of advice I can give you is get started, no matter how small. Even if it's $25 or $50 a month, get started, make it automatic. So set up a money going into your bank account or into your retirement account or into your investment account. Set it up so a certain amount goes out every week or every month or every paycheck. Look for free money. If you have a 401k at work or a retirement account at work, your employer may give you free money for putting money in. So let's just say you put 3% in, your employer very well may match that. So all of a sudden you put 3% in, you get a tax deduction, so it costs you 1.5% or 2%, and then your boss puts in 3%. So instead of getting, you get $200 less a month, but all of a sudden there's $600 going into your retirement account, which can grow exponentially over time.
And I want to get to your ebook release, which you released especially for our viewers online. But before we do that, tell me a little bit about President Donald Trump's executive order, which was recently implemented on February 3rd and actually won't officially be implemented until April. What does it mean for financial advisors and for regular Joes in the community?
So there's this rule called the Fiduciary rule, and what fiduciary means is that your advisor will put your best interest first. And most people think when they go to a financial advisor, they go to a bank teller, they go to some investment salesperson, that person is putting their best interest first and they're doing what's right for them. The fiduciary rule is going to make that a law and make sure that someone in my position had to do what's right for you. I've been a fiduciary for over a decade, and I've chosen it as a way to do business because I think putting my clients first and doing well by them means that they stick with me, they're happy, and they're more likely to reach their financial goals. Donald Trump is pushing back the fiduciary. We put in a 6-month moratorium, give or take there, which means instead of April 10th it being implemented, they're kind of kicking it down the road to look at it and revisit it, because there is a lot of people that make a lot of money doing commissions and are selling products and are very concerned for themselves on our side of the table rather than the investor. And as investors, it's going to mean that you're going to get non-biased advice, or if you're getting not actually biased advice, you're going to have to be made aware of it and has to be disclosed, which it'll help you make informed decisions and eventually make smarter financial decisions. And the goal would be to hopefully get people saving for retirement and actually get them advice, because people are not saving enough for retirement.
Okay, and you just released an ebook online, 10 big tips to get your financial house in order. Tell me about it. What can people expect when they go online to check it out? Where can they find it?
So it's 10 tips that everyone needs to do to reach financial independence. And I say financial independence is the day that work becomes an option. I have so many clients that love what they do, and I love what I do, and I have no intention of quitting working, but I do want to have enough money saved and have a net worth so that if I wake up one day and don't want to go to work, I'm not going to have to go to work. And I think a lot of people I work with as clients want to feel the same way. They want to be able to choose what they're doing. And it's the 10 things that everyone needs to do, and everyone can take a little bit of it and work into their situation. I'm releasing it early for your viewers at financialplannerla.com//torrents. So that's financialplannerla.com/torrents. You can download a free copy if you viewed the show. So it's a great way to just get started, some hopefully motivating for some people, or if you're already started, to take it to the next level and just improve and move towards your financial goals a little bit faster and work a little bit easier.
Well, David, thank you so much for joining me.
Thanks for having me.
Yeah, and you can keep up with David Rae through his Twitter or email him at david.rae@trilogyfs.com. You can also go to financialplannerla.com/torrents for his ebook that he released for our viewers at home. We hope tonight's topic was informative, but should not be considered financial advice. So if you would like any more information, definitely follow David on his Twitter handle at david.rae_CFP. And that does it for NewsBreak Live. City Council is back tonight on the dais. If you ever have news or video that you'd like to share, please email us at newsbreak@torrantsca.gov. And for Facebook and Twitter users, use #NewsBreakLive. We'll see you next time. Have a great night.